Hi, everybody, and welcome to this special episode on our Made for YouTube series. Today, we're going to be talking about ESG funds. So, what is ESG to begin with? Environmental, social, governance, norms which define how companies should be doing business, and these are more like best practices, right? So, companies which fit this criteria are companies which are called ESG compliant companies, and funds which invest primarily in such companies are ESG funds, right? So investing is not just, in fact, in India, it's in the very, very early days. Globally, it's something which is, caught on a lot of momentum. And in fact, worldwide, it would be what, roughly a $30 trillion dollar industry. In fact, in the US now, about one third of the total assets under management are now ESG compliant, right? So what is the scope in India? Where do we stand currently? How far do we have to go? And is it something that can really become a reality, in a developing country like India? So joining me now, I have Ashwin Patni, the head of products and alternatives at Axis AMC. Hi, Ashwin. Always good to speak with you. And ESG is something that I believe you guys at Axis are also very, very passionate about, because I remember when I had spoken with Mr. Nigam a few years ago, and I had asked him that, why are you launching an ESG fund? And he said that, we don't even know why, because pretty much all of our funds are, ESG compliant, right? And at that time, there were just two. Now, in India itself, there are what, 7, 8 funds, there's an ETF. So what is the status of ESG investing in India? Where does it go from here? And why does an average investor like, say, me, need a ESG fund?
Sure. And there's obviously a lot to cover because you sort of 2-3 big points in that. So let me try and answer that one by one. The first thing is, why ESG is relevant, even from a global perspective. Why is it that ESG is taken on? And you mentioned some big numbers, and they're absolutely true. It's the fastest growing investment theme around the world over the last few years. So why is this happening? And the answer is very simple. It's that in the old days, the business of business, as it was said, was to make money. And essentially how that money was made was something that people were not too fussed about, as long as the money kept coming in. Over the years, however, of course, there is much better understanding of the damage or the kind of catastrophe. In fact, I can use the strong word that the reckless attitude towards making money can cause to the society around us. And of course, environment is the most obvious one, but there are other issues such as social governance, what it means for customers, what it means for clients, what it means for your own employees. So essentially, where ESG has become this big theme is because there is growing realization that when you're looking at a company, it's not just good enough to look at the money that it makes, but also look at the kind of non-financial matrix in terms of how that money is made, and whether that approach, if I can use one simple word to explain it, is sustainable. And it's sustainable from an environment perspective, sustainable from an ecosystem, the stakeholders around us perspective. So that's why it's become so big. And coming to your second part, which is how does this therefore mean, what does this mean to us in India locally? Definitely, it's going to be a big, big theme. As you rightly said, we're just getting started. But the important thing is that the issues at hand, which are the ESG issues, are issues which are very, very relevant in India as well. Governance is something that we all talk about. So that's something that's been around. But increasingly we are seeing examples. And if I were to just take a couple of very recent examples, for example, look at the impact of the recurring cases of bad air in some of the cities, and what is that leading to in terms of policy changes, etc., on certain industries. Second example is, we are obviously a part of the Paris Accord. We have undertaken to cut emissions by a certain stage. So therefore, what does the government do to achieve those targets in terms of using renewables, in terms of cutting down the use of certain types of fuels? So these are real issues. These are having real implications for businesses as we speak, and therefore incorporating these into the decision making becomes integral, whether you call it an ESG fund or not. But if you're not capturing these issues, you're not getting a complete picture of the company that you're analyzing.
Ashwin, I totally agree, and I lend my full support to, say diversified equity funds wanting to invest in ESG companies. I'm still to wrap myself around a pure fund whose only business is to select ESG companies, because to my mind, I mean, that's a universe which is very, very small, right? But in any case, we've seen for years celebrities get hauled up for endorsing brands which sort of are foul of the current mood and such of the people. We've seen advertisers get hauled up when they've been advertising on mediums which are not considered fair and just. And therefore, I take the point that why shouldn't companies, or why shouldn't funds get hauled up for investing in companies which are not doing it right? But no less than Warren Buffett said that a company's priority is to its shareholders, to give back the return, not to invest, or not to focus on ESG norms. So therefore, what does one make of it? Because for pretty much every other kind of investing, we look to Buffett as the last word. Should we not be doing that here?
No, I think there is some amount of sort of misapprehension, I should use the word. And I mean, obviously Buffett is a huge personality, so I don't want to specifically look at what he may have said. But if I just look at around us, there is obviously, for those people who are not into ESG in a detailed way, there is always a misapprehension that is it something that is beyond the shareholder value objective, or are we getting into areas which frankly are not really directly related to the business? But let me just give you a couple of examples. I think this is absolutely not the case. Let's look at last year, the 2020, which was completely defined by this entire COVID disruption and the chaos that happened around the lockdown. And if you look at, just a couple of companies which were operating in that time, look at, FMCG companies, they went out of their way to, help their distribution chain remain operational during the lockdown. They were providing essential goods, which meant that the network had to be open. Now, there are two ways to look at this, this activity that companies did. One is to say that in the near term, for the next quarter, going ahead and helping your distributors or giving them some additional support, you don't need to do it because you're spending some money, but it is not, in terms of directly helping business. But the other longer term way of looking at it is that if you have to become really a sustainable long-term growth business, then how do you create that differentiator? How do you create that affinity towards your brand, towards your company? These days, it's about, more and more, and especially in this day and age of social media, the day and age of the internet, all of us as consumers, or as employees, as shareholders, want to get associated with the right companies. So the companies have to demonstrate that activity in order that they can attract customers, they can attract the right set of employees, the right set of shareholders, etc. So there may not be an immediate financial implication, but there is definitely a long-term strategic implication in many of these actions. And that's why it's not at all about just doing something beyond the shareholder. Ultimately, we believe this is important because it actually helps companies achieve that shareholder value in the long term.
And we've seen at least globally, the rise of the activist investor, right? So perhaps that's the first stage in popularizing ESG, and perhaps those are the guys who will take it to the companies. But tell me one thing: is ESG investing also linked to superior returns? I mean, just to take that point forward, it's all very well, I want to be ethical, why not? So does the person next door, right? As well, I don't want to compromise on returns. I mean, I do my social work, I do my charity, but when I'm making investments, returns is something that's sacred, right? So what has been the performance, and what has been your experience in the last 1 year? Your fund is about to complete a year.
Yes.
How has the experience been?
So I think the experience has been pretty strong. Of course, as you rightly said, the fund itself has just been about a year. So here you can see it both sides. One way to see it is it's been a good positive start and the fund's done well. But at the same time, you can also argue that a year is probably not enough. So I would say that, on balance, in India, the jury is probably a little bit out because we don't really have hard data which can back ourselves to say that, hey, these are ESG funds and this is what they have delivered over the last 5, 7, 10 years. And this is what the rest of it is. We are hoping that, as we go along, this track record gets built up. But as investors, as someone who has been investing, as you rightly said, with a long-term orientation in our other funds, we have absolutely no doubt that sustainable alpha cannot come if you are not looking at these kind of factors in a careful manner. So therefore, definitely, while we believe that there is genuine value to be added, while we know that there is good data globally about this, but when you come to India, the hard data is obviously today still quite limited, but it is our belief, knowing the companies around it, etc., that definitely this is something that we should see making a meaningful difference.
Ashwin, it's one thing to make an investment. I've made a fresh investment. How do you monitor the ESG compliance? I mean, at least in India, we don't have any government mandated ESG score or tracker. So how would, on a fund level, how would you monitor it?
So we have, and in fact, I think SEBI has been quite progressive here in terms of asking all asset managers to form what is called the stewardship policy. Now, stewardship policy is essentially a mechanism by which any asset manager like ourselves, when we have investments in any of the companies, how do we engage with them? How do we work with them? How do we get them to improve their disclosures? So you said that, how do we calculate ESG scores? Now, the most important thing when you want to calculate ESG scores is to have good quality data. And data which can be compared across different companies in the sector, data that can be compared across different sectors, data that is relevant across different time periods. So one of the biggest tasks for us is to actually work with the companies to see how we can get better quality disclosures, get a better clarity on what they are trying to do. And that is going to be a very important, especially, I think, as you rightly said, in India, slightly in a nascent market, everyone's just coming to terms with this whole concept. I think even for the listed companies, while many of them have their heart in the right place, they want to show more disclosure. I think there is a little bit of a learning curve. Even they are trying to, see what it is and get better. The good news is that for the best companies, the large cap, because we also have a very large foreign investor base, and they do talk to a lot of global investors, they have already started getting much, much better at this.
And, an average Indian investor, what do you tell them if, about the importance of ESG investing, right? So if you were to sort of convince somebody about the importance of ESG investing, what would you say to them?
I would say that, look at it in two halves. One, when we look at any investment, what are the two important halves, risk and return, right? So let's look at both these things one by one. The most important thing from a risk perspective that you're doing is when you're capturing ESG, you are getting a holistic view of what risks are there in a business. If I were to just take a couple of maybe global examples, look at a scenario where the biggest car company in the world suddenly had a massive scandal hit it because there were practices around the way they were, measuring or disclosing fuel efficiency data. Now, that is a massive risk on the business, right? And it can hurt back. A second example is the largest oil and gas company in the world, the way they handled a big oil spill and the kind of cost to their business that it created. So when you look at these kind of cases, if you are a normal investor, what ends up happening is that you will become a little bit more reactive to these events because you're focused on the business model, you're focused on the numbers, you're focused on the cash flows. And when these things happen, you say, okay, fine, what does it mean? Whereas if you are an ESG oriented investor, if you're an integrated, what is called the integrated approach, then you've already looked at what their practices are. There are always question marks which come up when you investigate, when you talk and you understand practices. And therefore, you're much better understanding of how these risks are building up. Of course, you can't control when the risks will play out. Scandal can happen out of nowhere, but you become a little bit more careful. You become careful in terms of how to value companies where the risk profile is a little bit higher. So that's on the risk side. So therefore, the answer to your question on the risk side is capturing ESG gives you a much holistic and therefore gives you a lower risk experience because you're getting better quality companies. And the corresponding part from a return perspective is assuming you can do a good job and you can bring down the risk of the portfolio. The performance becomes more sustainable. It's not a flash in the pan. It's not about getting great returns 1 year, 2 years, but it becomes more sustainable over a cycle. And that is what we are hoping that ESG funds can showcase, which is lower risk than regular products, but also more sustainable, longer term performance compared to regular diversified equity products.
All right, and here's hoping that it sort of catches on in India, because we're still trying to educate people about mutual funds themselves, and maybe I hope they go hand in hand from here. But certainly, it's a concept whose time has come. Yes.
I think one thing I do want to note is that there is a massive awareness and massive difference in the way we approach investing and themes when you look at generational splits, right? And even globally, and I would like to believe even in India, there's a very big difference between how, let's say, somebody in their 40s or 50s versus somebody who's, let's say, a new gen or a millennium will approach this whole. And what we are seeing is that as these newer generations are coming on, they are much, much more sensitive, aware of these issues. And they want to take decisions which are aligned with that, awareness, that philosophy or their worldview that they have. And therefore, I have no doubt that as this huge upcoming generation gets more and more involved into investments, we will see that big shift happening as well.
All right, Shulman, can only hope so. Thanks very much for educating us on the nuances of ESG investing. Thank you very much for your time. So there you have it, ESG investing in India. An idea whose time has come. There are already about 8 funds which are available for investing in, and my guess is as good as yours, but I guess there will be a lot more that will be coming up. I hope this has been useful for you. If you have any questions or comments, do send them to us in the comment section below, and I look forward to reading all of them. Thanks for watching.